Welcome to today's session on understanding what five-star stock ratings really mean and how they can help you make more informed decisions as an investor. With nearly 3 decades of experience in retirement planning and financial education, I'll guide you through the systems that shape these ratings and how they can influence your perspective. Remember, this discussion is educational only. It is not investment advice. Stock ratings are evaluations provided by independent research firms such as Morningstar or Standard & Poor's. These ratings help investors quickly gauge whether a stock appears undervalued, fairly priced, or overvalued. They typically run from 1 star, meaning strongly overvalued, up to 5 stars, meaning analysts believe the stock is undervalued and may present opportunity. It's important to keep in mind that these ratings are based on research and projections, not guarantees. Analysts determine a stock's fair value by examining earnings, cash flow, and overall business outlook. If the market price is trading well below this estimated fair value, the stock may be labeled undervalued. That doesn't mean it's guaranteed to rise, but it suggests there could be room for correction as market perception catches up to fundamentals. Factors like market inefficiencies, temporary pessimism, or hidden strengths can create these opportunities. Here's how the star system works. 1 star means the stock is considered strongly overvalued, likely not worth the risk. 2 stars indicate it's still overpriced, with limited return potential. 3 stars signal fair value, suggesting returns in line with the overall market. 4 stars suggest undervaluation, with better potential for outperformance. And 5 stars, the highest conviction rating, means analysts believe the stock is significantly undervalued and may present strong upside. But again, these are informed opinions, not promises. 5-star stocks stand out because they're seen as opportunities trading well below intrinsic value. They may provide what analysts call a margin of safety. Investors are drawn to them because the research community often has strong conviction in their fundamentals. Still, risks always exist, whether it's poor company leadership, shifts in the economy, or industry disruptions. Even the best research can be wrong, and sometimes it takes much longer than expected for the price to correct. Let's look at 3 examples. A 1-star stock priced at $100 with a fair value of only $60 suggests significant overvaluation. A 3-star stock at $75 with a fair value of $78 is fairly valued, neither a bargain nor overpriced. But a 5-star stock priced at $40 with a fair value of $70 points to potential upside of over 40%. The lesson? Ratings help us understand the relationship between price and value, but they don't predict the future. Even if you aren't trading stocks every day, understanding valuation concepts can sharpen your financial literacy. You'll become a better consumer of financial news, filtering hype from real analysis. You'll gain context when reviewing your retirement accounts or stock options. You'll also develop patience, recognizing that price and value converge over time, not overnight. And perhaps most importantly, you'll reduce emotional decision-making by relying on fundamentals instead of market noise. While I once served as the principal of a registered investment advisor firm, I no longer manage investments or charge advisory fees. My role today is purely educational, helping individuals like you understand these concepts so you can make smarter retirement and financial choices. My focus is on planning and education, not on selling investment products or managing portfolios. That way, you can keep more of your returns working for you. Here are the key points to remember. A 5-star stock rating means analysts believe the stock is undervalued, but outcomes are never guaranteed. The 1 to 5-star system gives you a framework for thinking about valuation. Use these ratings as educational tools, not as predictions. And finally, learning valuation concepts can build your confidence as a long-term investor. Even professionals don't always get it right, which is why ratings should be seen as informed opinions, not facts. Thank you for joining me in this educational discussion. Remember, nothing here is a recommendation to buy or sell any stock. Ratings reflect expectations, not guarantees. If you'd like to learn more about retirement planning and how to take control of your financial future, I'd be glad to have that conversation with you. As my focus is on planning and education, not selling or managing investments, you can schedule a free 45-minute consultation with me. During this session, you'll have the opportunity to ask your questions and explore strategies tailored to your retirement goals. Simply scan the QR code on your screen or visit akersretirement.com to book your free video call today. And once again, please remember this presentation is for informational purposes only and should not be taken as investment advice.